Hi everyone, this is the 2026 Mentorship Program Lecture 8. So in this lecture, I'm going to be doing a live top-down analysis on the top currency pairs that we will be trading on the 2026 Mentorship Program. Now, for those that have been going through the lectures, this is just another new week where I will be talking about what I'm currently anticipating in price, what are my draw on liquidity, and where I'm currently looking at price to trade to. Now, after going through this lecture, be sure to go through your own personal chart, understand what I explained and what are my draws on liquidity, mark them up on your own chart so that you can keep track and make sure you're updated on what I'm currently looking at in price. This will teach you how to anticipate price so that you can gain the anticipatorial skills of learning how to become a profitable trader. And this is one of the major steps, learning how to anticipate the price. What are you currently looking at price doing? So let's move to the chart. Let's go to the weekly time frame. Let's start from the weekly time frame. On the weekly time frame of the dollar index, last week I talked about the weekly order block that I'm looking at price to use the order block as a resistance to trade lower. Which last week price traded higher into the first quadrant level of the order block. So what I'm currently looking at in price is that I'm still looking at price respecting the order block. If price was to respect the order block to trade lower, seeing the daily time frame trend aligning with the idea, then I will be anticipating lower prices. But at the same time, if price were to trade higher and go above the mid range, if price were to go above the mid range of the order block, which is the zero point 0.5 level, if price were to go above the zero point 0.5 level, I will be anticipating higher prices to run the high as a buy side liquidity. So the reason I'm talking about price going above the zero point 0.5 level was a question that was asked that currently I'm looking at lower prices on the weekly time frame on the dollar index. What if price were to trade higher and knowing that is the weekly time frame is going to take weeks, in some cases it might take weeks for price to either respect it or trade higher. Price might just stick at this area, range a little bit, and it might take a few weeks before actually going higher or going lower. So he told me that if he were to wait for price to run this high before changing his bias to look for higher prices, or is there other way around? So there's no other way around just per se. It's just that looking at the other block, how is price reacting to the other block? How I do define it is that if price was to go above the mid range of another block or below the mid range of another block, I feel like there's a low probability of price respecting the other block because the most sensitive part of another block is the opening price. So for price to trade through the opening price of the other block candle, trading to the mid range, that makes it a low probability order block for price to use it as a support to trade higher or lower. So you can write that down so that you can understand why I'm talking about price going above the mid range. That if price were to go above the mid range, I will be anticipating higher prices. But as long as price stays below the mid range of the other block, I will be anticipating lower prices. Currently, I'm looking at price in taking out previous week low, and that's my draw on liquidity. On the daily time frame, Now we need to see the daily aligned with the weekly before actually taking advantage of the trade idea. On the daily time frame, Mondays just took out Friday's low, currently supporting from the proportion of the block from the main of the block. Here's the main of the block, and price is currently supporting from the proportion of the block. Now looking at this price action, before I look at lower prices, I need to see a run on the mid range of the other block. I want to see a run going below the mid range. Let's take this off and take this off. Below the mid range of the other block, here's the other block, here's the mid range. If price were to trade below the mid range, I will be anticipating lower prices. My drawn liquidity will be the swing low. Currently, looking at this price action, there might be an impulsive price from the proportion of the block to support price to trade higher. I'm not here trying to make a big gesture about price trading higher. But if price were to trade higher, I will only be taking advantage of intraday setup with the idea of price trading higher, which means I need to see the 1 hour time frame aligned with the idea for price to trade higher. But on a broader time frame perspective, if trade lower, going below the mid range, I will be anticipating lower prices to run previous week low. So from the opening price on Sunday, price dropped a few pips below the opening price. You can see after the gap in price, the new week opening gap, you can see how dollar dropped. After the drop on dollar, trading to a previous new week opening gap, trading below the previous new week opening gap. If price were to support from the daily or the block, then we might see a 1 hour trend trading higher, which currently price is supporting from the other block. You can go to the 30 minutes, you can see it more clearly. So these are the intraday setups I'm talking about. Just brief intraday setup. You can see how price retraced new week opening gap, trade above the new week opening gap, 30-minute shift in structure. Now on the 1 hour, there's still a shift in structure, running out this high, support to price to trade higher. If this were to fail and price trades below the mid range of the daily order block, you can look for lower prices. Point is that we're looking at price on a daily perspective and on a weekly perspective. The ideal trade is to see price align with the daily perspective. Sorry, we want to see price align with the weekly perspective. When the daily is aligned with the weekly and the 1 hour is aligned with the daily, that makes it a high probability trade. But at the same time, you can still go for those intraday setup, just like last week where I anticipated lower prices, but price trade higher. When you look at it from a daily perspective, you can take advantage of those intraday setups. So a few students on the 2026, for those that are in the Telegram group, which I told you guys that you can easily contact me and I will reply to any of your questions from the Telegram profile. The link in the YouTube channel, when you click to the link, you have access to my Telegram contact where you can contact me on any question, which a few traders did contact me last week talking about price trading against the buyers, what they should do as a day trader. Now, if you are a trader, do take weekly expansion. I wouldn't advise you to take any setup from last week trade. But if you're a day trader, you can derive a short-term bias. You just need to understand what is going to be the next draw on liquidity on a daily perspective. So on a daily perspective, which I talked about the daily fair value gap in price using the daily fair value gap as a support to trade higher to run the previous week high. That was the draw on liquidity I gave the traders that did contact me saying that they are day traders and how they should approach price. Now, on the Telegram commentary, whenever the weekly and the daily is not aligned, I'm not mostly going to be talking about price because I know those are the areas that you might take multiple losses trying to force the trade. But if you know how to align it correctly, you can easily trade as a day trader, taking those lower time frame trades. I will be talking about it more, not showing you guys what I'm trying to tell you guys to be patient about. You need to be patient when mostly when you pick up to a particular trade idea like a weekly expansion. You only wait when the weekly expansion is aligned. But on a daily expansion, you're looking at what will price do on a daily basis. Then those are the times you pay attention to a daily time frame. So going in with a daily perspective, running out previous week high, seeing the internal shift, draw on liquidity should be price going above the new week opening gap, running out Friday's high. On the weekly time frame on Euro USD, on the weekly time frame on Euro USD, still the same bias to the dollar index, just in an inverse way. Looking at price for price to respect the daily order block as a support to trade higher. Last week we were looking for higher prices. Price used the weekly fair value gap as an inversion fair value gap to trade deep into the other block. Still the same idea. Going below the mid range, we will be anticipating lower prices. But as long as price is still above the zero point 0.5 level, I will be anticipating higher prices. On the daily time frame, Monday, price took out Friday's low, retraced to a daily fair value gap, currently resisting at the other block, which you can see the other block. Sorry, let's use the fib. Now the idea is still the same. As long as price is below the zero point 0.5 level, on a daily perspective for day traders, we will be anticipating lower prices. Price to respect the daily fair value gap and respect the other block, the daily order block to trade lower. And if price was to trade below the zero point 0.5 level, for those looking for the weekly expansion, then you can focus on the higher time frame, like the 1 hour, the 4 hour, of anticipating lower prices for price to run the previous week low. In the 1 hour time frame, after the run on the swing high, short-term retracement, taking out the swing low, there's not much of a shift in structure on Euro USD. But I think on the dollar index, when you look at it from a 30-minute perspective, there's a shift in structure on the dollar index. I think still the same on Euro USD, anticipating lower prices to trade below the new week opening gap, running out Monday's high. Currently, it's not Monday's high, but running out the swing low. On the weekly time frame on GBP USD, price is still trading lower after price from the swing high. Trading lower, the next drawn liquidity should be the weekly fair value gap. But I told you guys I wouldn't be anticipating lower prices unless the lower prices align with the dollar index. But I can see the alignment between the dollar index and GBP USD before taking any sell trading to the weekly fair value gap. But as long as price is still not aligned with the dollar index, I'm mostly not going to be taking much trade in this currency unless the daily time frame is aligned with the dollar index. So just do some waiting, some patience, a little bit of patience in this currency before actually taking a trade. But if we were to look at it from an individual currency perspective, I should be anticipating lower prices to trade to the weekly fair value gap. It should be the draw on liquidity for price to trade lower to the weekly fair value gap, which on the daily time frame you can see after the swing high, after price respected daily fair value gap, swing low, retracement, auto block. Now there's a fair value gap, but it's not much of a fair value gap, but we'll talk about the other block. As long as price is below 0 0.5 level, I will be anticipating lower prices. Now, compared with the dollar on the daily perspective, the dollar is aligned with Euro USD and the dollar is aligned with GBP USD in price trading lower. On the 1 hour time frame, there still isn't any shift in structure after the retracement to the other block and the fair value gap. So currently you can see there's a 1 hour counter trend trading lower to run the swing low. Now you can take a sell from a lower time frame like the 15 minutes and the 5 minutes, but this is a low probability setup. But before the New York section, let's say around 10 a.m. If you can see the trade lower running out the swing low, we will be anticipating a retracement before looking at lower prices to run this low. So I'm still anticipating lower prices, but if you want to go more aggressive, is to look for the sell directly from the retracement to the daily fair value gap, which your time frame should be the 5 minutes and the 15 minutes. In the 5 minutes, there still isn't any shift. Price did not take out the swing low. It's just a brief retracement. If the trend was to trade lower, which means for dollar to trade higher and Euro USD to trade lower, we might see lower prices on GBP USD. But at the same time, I still told you guys that I'll still look at it at a higher from a higher time frame perspective. I want to see the higher time frame aligning with the idea before actually going aggressively in taking a full position trade. But as long as price is not aligned with the idea, I'll still stick to low probability setup from a daily perspective. Try to see what full price we're doing on a daily perspective. On the weekly time frame on USD JPY, talked about the buy side liquidity on previous week's lectures. I talked about price running out the buy side liquidity, which currently, after price took out the buy side liquidity, price did a retracement to a daily fair value gap, which currently prices at the daily fair value gap, supporting from the daily fair value gap. So if we were to look at the weekly perspective compared with the dollar, it's aligned with the idea of a higher prices on the dollar index. So we might see higher prices from the daily fair value gap to run out the buy side liquidity. So if you trade JPY pairs, if you take trades on the JPY pairs, these are trade setup anticipating higher prices to run the buy side liquidity. But if price was to trade below the daily fair value gap, I will be anticipating lower prices when it's aligned with the dollar. So you need to see that alignment before actually looking for those lower prices. On the 1 hour time frame, you can see internal shift in structure. Currently, price is supporting from the new week opening gap, and at the same time, the 1 hour order block trading higher, which on the dollar index on a daily perspective, this is aligned with the idea in anticipating higher prices. The 5 minutes, you can see there's a shift in structure on the 5 minutes from the other block going for the swing high. I think during the New York section, we might see an expansion trading higher, guys, if I were to be right about the price. Oh well, I will be giving out updates on the Telegram channel on what price did, mostly on USD JPY and the dollar index. Because I think those are the two most interesting pairs going in this week. So make sure you go through the charts, make sure you mark out the points of interest that are aligned with the idea and look at how price studied, look at how price trades through that point of interest or how price is respecting the points of interest. And make sure you do your own personal study. So that's it for this lecture. See you guys in the next lecture.